Hello, you've seen me, if you've been around today, you've seen me in a couple of different roles today, but I'm actually also representing our newest sister company, Nhk Capital Partners. So I'll take my CMB EB-5 hat off, and I'll put my Nhk hat on. And I'll try and be brief also, and I really appreciate that everyone has stuck around. This is fantastic. Nhk is, as I mentioned, our sister company. And it was started with a really simple concept. We have worked with a lot of EB-5 investors with CMB. CMB has been incredibly successful, over 6,000 clients. Many of those investors have received approvals at all stages and have received their capital back. And we've developed a lot of trust with our investors. And so we've consistently had people come back to me and say, well, you know, the EB-5 projects are structured differently. They're structured low rate of return. Number one goal is the green card. But can you work on some other investment structures where they're traditional business investments, not tied to EB-5, and the rate of return can be much higher for an investor? And so we have a lot of development relationships, and that became a natural evolution of our company to try and offer non-EB-5 investment opportunities to people who are looking for additional US investment opportunities, and that's exactly what we've done with Nhk. So in addition to that, we have several dedicated employees that are working for Nhk on an almost exclusive basis. So if you were to see them today, they'd be putting the Nhk hat off and very rarely taking that hat, or putting it on and very rarely taking it off to help out on the CMB side. But it's the same core team that has built trusted EB-5 projects over the years. So the project I'm going to talk to you about today, we call it the Link SFR. And SFR stands for Single Family Rental. And what we've done here is we've tried to capitalize, much like we do with our EB-5 projects, and focusing on the growth of e-commerce and taking on a lot of logistics buildings in the United States. We've tried to capitalize on the growing trend in single-family rental units in the United States, in particular in the Dallas, Texas market. So single-family rentals, we're talking about detached, individualized homes where people have some additional space. You know, during COVID-19, during the pandemic, people in high-rise buildings were maybe a little bit more vulnerable. People in larger apartment buildings were maybe a little bit worried about the proximity and the population density. And so in areas where the land is still attainable at a reasonable value, it makes all the sense in the world to try and start working on projects where you can give people a little bit more property, give them a little bit more opportunity to spread out, give them a sense of feel of having a traditional single-family home, but in a high-demand rental market. So you see this trend playing out in the statistics, in the market statistics. Year over year, you consistently saw the two trends, demand for single-family rentals and attached rental units, staying pretty similar. You see that major separation starting in 2020, where you saw more than double the demand for the detached single-family rental units growing, as I mentioned, really because of the trends setting in COVID-19. What you also saw in this market, in particular the Dallas-Fort Worth market, is you saw the supply of available units becoming more and more stagnant. So there's general demand for rental units in and of itself, and of course a growing demand for those detached units. You see vacancy rates coming way down. You see the number of inventory being added to the market staying or relatively flat, plateauing essentially. Again, because of these types of trends, you're seeing more and more institutional grade investors get into this space. You can see approximately 85% of the market traditionally owned by mom and pop. These are people who are taking on maybe buying a couple of smaller rental properties, not necessarily building major communities, but you're going to see this trend start to shift as institutional investors enter the game and try and build out communities of detached rental rather than acquiring small properties around town. In the Dallas-Fort Worth metro area, if anyone's familiar with this area, it's one of the fastest growing regions in the United States for a whole multitude of reasons. In the US, we have different taxation laws state by state. And some states are very attractive to live in, some states are less attractive to live in. Texas has traditionally been very pro-business and it does not have state income tax. So there's a huge saving to high net worth individuals. There's a huge savings to the average person, really, frankly. And so we've seen it grow. It's the fourth largest MSA, the fourth largest metro area in the United States already, but its growth rate over the last several years, you can see since 2010, has just been off the charts, growing 15% since 2010. You can see the trend in the productive business environment. The lower taxation rates has also caused a lot of the nation's leading employers to relocate offices to Texas. You see these companies growing in the Austin area, the Houston area, and in the Dallas area in particular. And when you're talking about Dallas, in the area where this growth has been concentrated, you've been talking about the North Dallas-Fort Worth area. This particular project is located in Frisco, just north of Dallas. You can see some major cities, Plano, or some cities that have major growth spurts over these last several years, including Plano, McKinney, that area, Allen, Texas, and then north of those areas, Frisco, Texas. Frisco has been one of these target locations for some of these employers. You've seen the growth of some of these, entertainment, shopping districts, new residential communities, and we're going to capitalize on that trend. On the project, and this is where it gets really interesting. One of the biggest entities, what I think is one of the coolest entities that's relocating to this area is the PGA of America, the Professional Golf Association. Its original headquarters is located in Florida. They're moving from Florida to Texas, in particular to Frisco. And a long-term development relationship of ours, Stillwater Capital Partners, is a group that we've worked with on EB-5 projects, and we've also worked on NHK projects. They have a very successful track record. In fact, our first project that we took on as a new company, NHK Capital Partners, back in late 2019, early 2020, has already repaid, and repaid at a very attractive rate. I'll get into that here in a second. But this group, Stillwater, was able to be a part of this team to convince the PGA of America to relocate, and they have become the master developer of this new development that will not only complete their new headquarters campus, but 36 holes of championship golf. The golf courses are anticipated to host several significant events, but most importantly, the PGA Championship, one of the 4 major golf events every year. And so it's going to be a fantastic opportunity. There are new areas of development. You can see off to this side. Let's see if this laser works here. Yep. Off to this side of the location, you can see, or the right side of the screen for those of you over here, you can see some of this area starting to build out. So in addition to the PGA headquarters and the golf course, you're going to have a massive resort that Omni is building. Omni Hotels Group, one of the high-end hotel developers in the United States. You're also going to have shopping, you're going to have convention center space, and you're going to have our residential community, the Link SFR, off to the right side of this development, an urban, walkable, modern, detached, single-family rental community. The development plan will call for 214 units. You can see it's a mix between 1, 2, and 3 bedroom units. Average size about 1,300 square feet. So this is about your average size of your traditional attached or apartment building, maybe a little bit higher end, a little bit bigger than your average, but done so in a detached format. Jump past these. Give you a little bit of visuals. Again, it's going to be a walkable urban community, beautiful streetscapes, modern architectural designs for each home. The homes will have garages, the homes will have modern amenities and things of that nature. And the project is starting to get underway. So NHK will start our capital raise. The developer will contribute additional equity to the project, and construction is expected to commence a little bit later this quarter. Our capital raise is targeted to be completed by mid to late May of this year. So we've already started taking investors for the project. If you're interested in investing in the project, you definitely would need to move quickly, get in contact with us, and do your due diligence. We always, just with CMD, just with NHK, we always ask that our investors get comfortable. We want to have the type of investors that are comfortable in the project, that understand the risks associated, because this will be a true equity investment, not a traditional EB-5 investment. And so this is truly a business opportunity. You can see construction is anticipated to be completed in phases. So phase 1 completion in 4th quarter of 2023, second phase construction in 2nd quarter of 2024. We talk about the phasing of construction because they will start move-ins to some of these units in phasing as well. That's very important to understand because it means that the community will start generating rental income while the project is still finishing its completion phase. And we're targeting an exit from this investment in just about 4 years, so 2026. So the overall investment, or target investment timeline, is about 4 years. Now the capital structure, you can see it's going to cost about $83 million to complete the project. The NHK equity commitment to the project will be just under $15 million, so you see about $14.9 million. The developer will also be contributing an additional $1.6 million. Will be mezzanine debt of a little over $12 million, just under $12.5 million, and a senior construction loan of $54 million. So it's true equity, but it's in a preferred equity position. Jump past that, of course, a little bit more details, 48-month hold period, substantial NOI at the point in time in which we'll be selling the facility, an anticipated sale price of the project at about $103 million based on appraisals that we can share with you for your review and due diligence, of course. Now let's talk about the Nhk deal structure in a little bit more specific terms. So overall, it will be a $16.6 million equity commitment, of which 14.9 will be that equity portion coming from Nhk. It'll be structured in a preferred position, and there'll be different hurdles and tiers for the developer to achieve. Of course, what we're really concentrating on is the ultimate completion of the project, stabilization of the project, and the payday that will occur at sale. Again, target timeline of about 4 years. Now, to get into the terms of the investment, we're looking at a minimum investment of $100,000 US. That would be to buy in at 2 units, and then you would be allowed to put in as much as you want from there. So we'd like to keep that investment level, that minimum buy-in low, because a lot of our investors are former EB-5 investors that have received their capital back. And if you think about it, some of them, they get that $500,000 put back in their hands, and they have plans, they have other aspirations for how they want to spend that money. And so we've always looked at it as, okay, well, don't force them to put that whole $500,000 back into it. Give them an opportunity to buy in at a little less. Many investors buy in at that minimum of $100,000. Many investors also buy in at a much greater amount. We've had investors put in a couple $1 million based on the partnership, based on the structure, based on the project. So down at the bottom of the screen, you'll see our target cash flow return. Now there won't be any distributions for the first couple of years. Obviously that will be through the completion of the construction of the project. And then the cash flows and distributions that would be eligible or potentially be eligible to be made to the Nhk partnership will be relatively minimal in that 3rd year, in that 2023 year. So this isn't an income-based type of investment where you're going to be putting this capital in and generating a significant yield year over year for the short term. It's really about a 4-year exit, and you can see at year 4, that's when you have this significant return coming to fruition upon sale. We're looking at a target IRR, it's very significant, of just over 28%. We're looking at a target equity multiple of just over 2x. So this is something that's very significant for this short term of an investment, and it's frankly something that we're very confident that we'll be able to achieve with this particular project. So to tell you a little bit more about Stillwater and our history in working with them, we've been working with Stillwater since about 2013, so an almost 10-year development relationship with them. They've been a significant player in multifamily development in the Dallas-Fort Worth and in the Texas market in particular. We've worked on projects with them in Austin and San Antonio. Our first project for Nhk with them was called the Augusta Lofts. It was actually a project in San Antonio, Texas. I say the Dallas-Fort Worth area is growing, but some of these other cities in Texas are growing at a rapid rate as well. Austin in particular, a lot of relocations from California and other areas across the US. Major tech companies like Apple and Tesla opening facilities in the Austin metro area as well. In general, Texas is incredibly strong right now. It's part of what gets us so excited about these types of projects and the work that we've been able to do with Stillwater Capital Partners. Again, an unbelievable developer, high-end multifamily, and they've got a relatively simple model. They're not typically a long-term holder of these assets, so they're looking to build these, stabilize these assets with renters, and then look to be able to sell these to institutional investors or, similar to our logistics project with a different developer, look to sell these to new investors, look to sell these to real estate investment trusts or retirement funds that are doing the same thing, looking at long-term revenue streams and appreciation from holding an asset like this. So, I mentioned a second ago, Augusta Lofts, our first project. We saw a very early exit. We saw a situation in which the developer overperformed, which was fantastic to see and gives us a lot of confidence in our ability to work with them. One of the things that we see in Nhk Capital Partners is a rollover effect. A lot of our investors have been able to achieve success in CMB. They've rolled over a portion of their investment into Nhk. A lot of our investors that were a part of this first successful project in Augusta Lofts have reinvested in other Nhk partnerships. And it's been fantastic to see. It's trust that we've established with our investors. We look at our investors the same way in both companies. If they have success, we're going to have success. And it's something that defines both CMB and Nhk Capital Partners. You see a 28-month, or an exit that was 28 months ahead of schedule, an IRR of 26%, and an equity multiple of 1.59x. And it occurred, again, 28 months early. It was absolutely fantastic. We're very proud of that achievement. So again, I want to thank everybody for sticking around to the very end. Nhk, I think, can be a fantastic opportunity for anyone looking at traditional business investments, not tied to immigration, but with a company that has a lot of experience in working with investors from all over the world. If you want to talk more about Nhk, I'd like to talk to you after this, or feel free to stop by our booth, or if you're joining us tomorrow, feel free to grab me, and I'll tell you a little bit more about Nhk as well. So thank you so much.